$60 billion for mayonnaise and Old Bay seasoning? I love this market.
You're buying the rumor again, Nate. Show me the math that gets a legacy foods deal to $60 billion.
$20 billion in combined revenue. The synergies write themselves. You just hate condiments.
I hate banker math. But if Unilever is actually merging this with McCormick, the flavor profile of the whole industry just shifted.
Let's look at who is really eating whose lunch here. The rundown.
$39 million. That's what Allbirds is going for.
American Exchange Group is buying them. Shares jumped 30% on the news, which is hilarious because 39 million is essentially a rounding error for a brand that used to be on every single venture capitalist's feet in Silicon Valley.
I checked their IPO pricing from a few years ago. They were valued at over $2 billion. Now they're getting scooped up for the price of a mid-tier Manhattan penthouse.
A steal for American Exchange, honestly. Put those wool shoes in big box retailers and print cash.
Speaking of printing cash, everyone is still chasing the data center ghost. Primaris Services is buying Pinecrest Electric for $422 million in cash.
Classic picks and shovels play. If you can't build the AI chips, buy the guys wiring the cooling systems. I actually love this deal.
I think it's a massive overpay. $422 million for an electrical contractor just because you slap the words data center on the press release. The multiple has to be absurd.
You're looking at historical revenue. You have to look at the backlog. Every tech giant needs these facilities powered up yesterday. Pinecrest has the specialized labor. You can't just hire a random electrician off Yelp to wire a hyperscale facility.
Sure, but labor costs are eating their margins. I'll believe the synergy numbers when I see them in the Q3 earnings.
Fair enough. Let's pivot to pharma, where the numbers are actually absurd. Biogen is dropping $5.6 billion in cash for Apellis Pharmaceuticals.
$41 a share. They desperately need to bolster their rare disease portfolio.
And Eli Lilly is buying Centessa for up to $47 a share. The biotech shopping spree continues.
Notice the up to $47 a share on that Lilly deal. I pulled the contingent value rights structure. A massive chunk of that payout is tied to FDA milestones that historically have a 20% success rate. It's brilliant risk mitigation by Lilly.
You and your contingent value rights, you just love a good earnout.
I love when buyers don't get fleeced by biotech founders selling a dream.
Well, if you want a dream, look at wealth management. Carlyle just took a majority stake in MAI Capital Management, valuing the firm at over $2.8 billion.
Private equity buying wealth managers is just a giant feedback loop. They buy the wealth manager, then the wealth manager puts client money into the private equity firm's funds.
It's the circle of fees, Maya. Beautiful, really.
It's a regulatory headache waiting to happen.
We'll see. But none of these are the main event today. We need to talk about the spice aisle.
Yes, the whisper numbers on this McCormick and Unilever combination are ridiculous.
$60 billion, a $60 billion flavor profile.
Combining McCormick with Unilever's food business creates a behemoth doing $20 billion in annual revenue. I spent all morning digging through Unilever's historical segment reporting to see what they're actually spinning out.
And what did you find? Because from a banking perspective, carving out a food division of that size is an absolute nightmare. The big one, $60 billion for spices and mayonnaise. I'm still trying to wrap my head around the sheer scale of this thing.
Well, technically it's spices, mayonnaise, bouillons, and mustard. But yes, McCormick combining with Unilever's food business, $20 billion in combined annual revenue.
It's a massive swing. And honestly, I love it. You're taking the king of the spice rack and marrying it to the king of the condiment aisle. The cross-selling opportunities alone are a banker's dream. Imagine the pitch deck.
See, this is exactly where my banker nonsense alarm goes off.
Oh, come on. It's a global flavor powerhouse?
It's a $60 billion defensive play. Look at the actual footprint. Unilever has been trying to figure out what to do with its food division for years. Growth was entirely stagnant. They wanted to pivot harder into health and beauty. McCormick is basically taking out their trash.
Taking out their trash? Hellmann's mayonnaise is not trash, Maya. They're buying massive global market share. Unilever's food distribution network in emerging markets is unparalleled. McCormick desperately wants that pipeline. You don't drop 60 billion just to do Unilever a favor.
I'm not saying it's a favor. I'm saying McCormick paid a massive premium for a legacy portfolio. I read through the initial filings this morning. The integration costs are going to be an absolute nightmare. You're merging two ancient, wildly complex global supply chains.
Which is exactly why you need scale. You consolidate the trucking, the warehousing, the raw material procurement. If they can squeeze out even 2% in cost synergies, the math works beautifully.
That is a massive if. Do you know how hard it is to integrate enterprise software across 80 different countries? It took them 3 pages in the press release just to explain the new management structure. When it takes 3 pages to explain who reports to who, you have a structural problem.
You always look at the operational worst-case scenario. Think about the pricing power. When you go to Walmart or Tesco now, you own the entire flavor profile of the grocery cart. That gives you immense leverage against the retailers.
I'll give you the pricing power argument. That part is actually smart. Retailers are squeezing everyone on margins right now, so getting bigger is literally the only way to fight back. But 60 billion? The Wall Street whisper numbers were floating around 50 just last week. Someone got very aggressive at the negotiating table.
I guarantee you there were multiple bidders circling those Unilever assets. Private equity would have loved to chop that portfolio up. Carlyle is out here throwing $2.8 billion at wealth management firms. You think they wouldn't look at mayonnaise? McCormick had to pay up to clear the field.
I guess we'll see how the market digests it. Pun fully intended.
Terrible, just terrible. But speaking of aggressive cash plays, we need to talk about what Biogen is doing.
Right, the Apellis buyout, $5.6 billion in cash.
$41 a share. I want to dig into that premium, especially with those regulatory filings dropping tomorrow. Voices. I'm reading this analyst note on Primoris buying Paincrest, and the exact phrasing is a direct play to increase exposure to the rapidly expanding data center services market.
Oh, come on. It's a $422 million cash deal for an electrical contractor. They're just slapping the words data center on a traditional business to get that sweet AI multiple.
You're so cynical today.
I read the footnotes, Nate. Electrical wiring is electrical wiring.
I'm actually going to defend the analysts on this one. Data centers need insane power loads. You can't just hire your local Sparky to wire a 100 megawatt facility. Paincrest actually has that specific expertise. It's a classic picks and shovels play.
A picks and shovels play. You just hit my banker bingo card.
Guilty as charged. But the market loves a good infrastructure story right now. Look at the coverage on Holcim. Market watchers are calling their acquisition of Cementos Pacasmayo a major catalyst for accelerating their Latin American footprint.
Now that is a narrative I actually buy. Cement is incredibly heavy. You can't ship it across oceans cheaply, so you have to buy local capacity. It's a pure geographic monopoly play.
Exactly, though I'm a little disappointed Holcim didn't try to call it an AI-enabled concrete strategy.
Please don't give them ideas. Some exhausted associate is formatting that exact pitch deck right now.
True. Speaking of formatting, I'm constantly refreshing my screen waiting for the regulatory filings on the Biogen and Apellis tie-up.
Right, we need to see exactly how that $5.6 billion cash breakdown is structured before tomorrow's bell. Spill the tea.
$39 million.
I know.
Maya, they were valued at over $4 billion at their IPO. Now, American Exchange Group is scooping up Allbirds for $39 million. That is literal couch cushion money for a buyout firm.
Honestly, $39 million feels generous. I looked at their last 3 quarters of operating data. The cash burn was atrocious.
But the stock jumped 30% on the news.
Because the market is just relieved someone is finally putting them out of their misery. It is a corporate mercy killing, Nate.
I still own 3 pairs. They are incredibly comfortable.
And that right there is why you are a terrible momentum trader. You fall in love with the wool.
My feet demand luxury. Speaking of ridiculous numbers, though, are we really doing SPACs again? Crown Reserve is taking Carvix public at a $1 billion implied enterprise value.
I saw that. I absolutely refuse to believe the SPAC window is creeping back open. It is a zombie trend. I give it a month before that valuation gets slashed in half.
I totally disagree. 1 billion for an automotive platform hitting the NASDAQ right now? I actually think they might pull it off. Retail traders love a flashy debut.
You are buying the narrative, not the math. If you want a smart, quiet deal, look at Primoris dropping $422 million in cash for Pinecrest Electric.
An electrical contractor? That is the most boring deal of the week.
Read the analyst notes, Nate. It is a pure data center play. Everyone is trying to buy their way into the AI infrastructure boom. They are buying real cash flow, not a blank check pipe dream.
Fine, I concede the fundamentals argument. But if we are talking about reading the fine print, we need to talk about what Biogen is hiding in their Apellis paperwork.
Oh, I have the draft regulatory filings pulled up right now, and the exact timeline on that $5.6 billion cash offer is fascinating. Tomorrow's radar. I am hitting refresh on the SEC site tomorrow morning for the Biogen filings. $5.6 billion in cash for Apellis is massive, but I need to see the exact regulatory timeline.
You are obsessed with the paperwork. The real action tomorrow is Worthington Steel. Kluckner just crossed their minimum threshold on the tender offer and pushed the window to April 14th.
A tender offer extension is not real action, Nate. It is just stalling. You know what is actually wild? Allbirds.
Oh, come on. $39 million? That is barely a rounding error.
Exactly. American Exchange Group scooped them up for $39 million. Remember when Allbirds was a $4 billion unicorn? Now they are selling for the price of a Manhattan penthouse.
Ouch, my closet feels personally attacked. But fine, watch the sneaker tragedy. I am tracking the whisper numbers on that $60 billion McCormick and Unilever mashup.
Assuming those revenue synergies actually exist, we will tear into those footnotes tomorrow.